Okay. Okay. We should be live here. Trying a new method again, so don't know how this is going to work. Okay. We are live. Okay, just waiting for some people to come in. I'm trying to find the live dashboard. Just 1 second here and we'll get going. Okay. We are live. Let's go. All right. What's going on, everybody? I'm going to draft a quick little tweet here. Sorry, the software just went live. I wasn't trying to go live yet, so I was not ready fully for this. I'm going to go ahead and link this. Yeah, I'm tired. I'm tired too, boss. I am trying to get a tweet out here. Give me a second here. Don't really have anything in mind for tweet. Just going to go ahead and ignore that for now. What's going on? Yeah, you're catching the Ellio's live stream. I'm going to go ahead and try to stream more because it's definitely nice to stream. And I just don't want to have to edit videos and stuff and have the cycle of videos when it's market updates, and they should be immediate. They should be instant. So it's like, it's been really frustrating because sometimes I'll film a video and then it'll take a few days before it goes up, and then it's just not as relevant. So just trying to mix in the lives for market commentary while we evolve. I'm sure you guys have noticed we're doing a little bit different style of content over the last few days. That'll keep iterating. But all right, we're going to start the content now. So let's get a drum roll, please. Probably chop out that intro as we edit the video and put it up for review. But the biggest headline of today is that the market's pretty much turned off. It completely went dead. After a nice sort of revival pump last week, we saw the markets just completely turn over and just completely die as soon as the ugliness of the carry trade revealed itself once more. Okay. And let's see. Yes, here we go. So this is the carry trade, the US dollar and the Japanese yen. As you can see here, right as the Japanese yen started to sell off or strengthen versus the dollar, you can see it's weakening again. This is effectively the inverse chart, right? So as this chart gets weaker, it goes down, you'll see that the fears that we could see this carry trade. I'm sure you guys have seen this. This is the fear of the Japanese carry trade, where people were essentially getting zero interest rates in Japan, and they were making money carrying those loans over into the United States where they could earn interest. And as Japan threatens to raise interest rates, which is what the bond market in Japan was trying to get it to do over the last few weeks, because if you guys were remembering, the new prime minister in Japan was talking about stimulus. So that spooked the markets, and then we got essentially this unwind of a panic. It doesn't seem to be going that far, but you could see it happened right in tandem with the green line, and that's Bitcoin. So Bitcoin crashed right as this carry trade nonsense started to rear its head. Now, as you can see, the carry trade has started to revert here. It doesn't seem like anything's gonna unwind or anything's gonna be a significant threat today. But it's important to realize why all of a sudden the market just fully scam dumped as soon as this started happening yesterday. So that's the fundamental news. And that caused some weakness in what was a really nice, or starting to be a really nice recovery from Bitcoin. Obviously, we can turn off the Bitcoin overlay here. We were getting some nice momentum here, higher highs, higher lows, and then we got this dump. And so the question is this the beginning of, effectively, is this the beginning of another leg down, or do we have higher to go? One of the things that I've been super, I guess, embracing lately is the fact that I have gotten so much conflicting data from every single source right now. Equities have turned into a full-on cesspit. People are turning on each other despite the most insane upside. Crypto's obviously down bad, beaten, bruised, abused, and we're trying to figure out what this next rally phase looks like. When are we going to get this next leg for crypto? And then we also have global monetary policy in flux. There's a lot of confusion right now. So I'm just embracing being more path dependent and just being open to data as it comes in, which is why these live streams, I think, are going to be a great format for you guys to see deeper into my head and for me to have more interaction with the audience. Most importantly, what I want to say here is this. We have here the biggest FUD of them all. This is, in my opinion, the biggest overhang and what will be the story of if we continue to see any downside. This is the current story, which is our biggest hero in Mr. Michael Saylor has now turned into our potential biggest weakness as an industry. So this is the absolute fear that the market's being hit with. And tell me if you guys can hear this.
Pressing, my hope is our MNAV doesn't go below 1, but if we did and we didn't have other access to capital, we would sell Bitcoin.
But that would almost...
You guys hear that? Let me know if you could hear that. Okay, cool. What's up, Dino? Loud. Okay, is it too loud? Is it too loud? Was that too much? Do I need to take that down a little bit? All right, too loud. Okay, loud. Okay, let me play that again. This is the MicroStrategy CEO, okay? This is the MicroStrategy CEO who works for Michael Saylor, who's now on the board, okay? I'll play this for you again.
Pressing, my hope is our MNAV doesn't go below 1, but if we did and we didn't have other access to capital, we would sell Bitcoin.
But
that's right. You heard it. They are potentially saying the thing that everyone has been worried about, right? This is the number one point of FUD in the entire industry. And that is that at some point, MicroStrategy might become a forced seller of Bitcoin. So this is like the moment right now. We have the Japanese carry trade that just started to unwind yesterday. And then we have this podcast where people are pulling out this segment of effectively the MicroStrategy CEO saying the thing that everyone's been worried about. Michael Saylor won't admit this, or he didn't really admit this directly, that there would ever be a sale of Bitcoin. He said they would never sell a billion-year holder or whatever. He's going to die with. He's going to bury his private keys. He's going to burn them in a volcano at the bottom of the ocean. But in the end, here you have the CEO saying, look, we have debts to pay. They raise debt, right? And so at a certain point, they have to pay it somehow. And so the big fear is if Bitcoin drops too much in price, that they might have to sell Bitcoin. And that's the scary part. Now, there was another part where Michael Saylor tried to explain how you could sell some Bitcoin and then buy more the same month, the same way a real estate developer might sell a piece of real estate and then borrow more to buy more. This is, to me, a little bit of not a direct explanation, right? Because in the end, real estate are unique items and they have unique value propositions, whereas Bitcoin is fungible. So why would you sell one Bitcoin just to buy one Bitcoin? I can't quite wrap my head around it. Maybe people smarter than me can. But this is the big FUD of the day, right? Is this actually going to be the new FTX, the new big darling of crypto that blows up? I mean, you're certainly seeing people talking about it, right? You have my boy Ivan talking about it. Speaking of which, have you guys seen Ivan's thumbnails lately? It is genuinely a work of art. Let me see if I can bring this up for you. I don't know if you guys do a lot of Ivan on Tech thumbnail exploration, but let me just bring this up to you because it's actually one of the, I think it's probably the best part about crypto in 2026, 2025. Look at my boy Ivan's thumbnails. I mean, this is art, right? This is art. You guys see this? Okay, I'm trying to catch you. Yeah, okay, cool. This is hilarious. I don't know what to say. This is just so funny to me. I mean, look at this. Look at this. I don't know. It's hilarious. I don't know. Anyway, so the new FUDs are dropping. The new FUDs are dropping at an astronomical rate. Okay, new FUDs are dropping by the minute, like meme coins were dropping 12 months ago. And this is the sign of sort of where we're at, right? We have the rotation from the optimistic moment to the pessimistic moment. And like all things, they will get overly emotional. Now, as we've said before, we're going to be talking about the game plan, like level by level, how we're going to approach this market. But also we're going to be talking about just like what's happening today. Why is it happening? Because we are having a nice little rally building here. And then we just got the off switch. So it's important to realize what caused this off switch to be so brutal. And that to me is pretty simple. You have the MicroStrategy FUD. You have the Japan carry trade fear of the unwind. I don't think it's going to unwind as fast as people think it's going to unwind. Again, these are just showing how spooked the market is. But it's important to realize this isn't just... You know, and then here you go. Here's MicroStrategy's MNAV. This is from Banter. They said, essentially, we are 1% above its danger zone. I don't know if we touch one MNAV or go slightly under, if that means it's all over, right? Or how they will plan to deal with that. MicroStrategy or Michael Saylor actually did this 20-minute speech where he talks about the spaceship that they've developed and how there's a USD battery and all this stuff. Look, either they're going to sell Bitcoin or they're not, right? Either they've been buying Bitcoin, we know that. Either they're going to sell Bitcoin or they're not. Either they're going to be able to keep raising money to buy Bitcoin or they're not. I think that it's worth understanding that things are changing and that the evolving landscape around MicroStrategy is changing. Do I think that there's a scenario in which Michael Saylor has to like force sell all of his Bitcoin? I doubt that. I doubt that unless there's some major black swan, which nobody can predict. To me, this is more indicative of a bottoming sort of scenario where you see just like all FUD all the time. Again, I've been of the opinion that things are very different. We'll talk about like the market structure and the optimistic take. That's going to be the second half of the video. For now, I'm just laying out, hey, what's happening today in the markets. And the way I'm new scripted writers, is that what somebody said? Yeah, I have some new script writers. I'm doing a lot more. Do I mind zooming in? I don't know what you want me to zoom in on. Yeah, I have some more. I'll talk about this very briefly. I have some new script writers I'm working with. I've been writing a lot of scripts myself, doing a lot more market analysis and trying to make just interesting content. I think that it's been tricky just focusing only on prices because in the end, the prices have been super, super different in the assets we actually care about, the altcoins, than last cycles. It's not pattern matched at all. And it's just been very difficult, right? It's been very pockets of momentum. It doesn't translate well to YouTube when there's just such quick pockets of momentum-based sort of asset plays where it's just quickly on and then quickly off. It caters more to professional traders, and it's just not what I'm trying to do is just make these, I just want to focus on other stuff as well as the price stuff. So the live streams will cover more of the market updates, asset-focused stuff, and then the long forms will be more, I guess, just stuff that I think is just amazing, the best content I can possibly create. And I hope you guys enjoy it. I'm excited. The comments have been amazing. The comments have been amazing so far. So thank you. Okay, this is another thing. Financial Twitter is also turning on itself, right? This isn't just a crypto thing, right? The traditional finance and crypto worlds have been so obviously mask off, removed to be the same exact market, just emotional, totally narrative driven, totally divorced from mostly facts and data, but also just focused on just emotion, right? And you see that the same forces that are driving Nvidia up were the same things driving Bitcoin up, and that the slightest deviation at the highs causes market-wide panic and just complete chaos. And so you see that the retail buyers this cycle, again, we can do a post-mortem why altcoins didn't go crazy this year. But obviously the AI narrative has attracted a lot of those excited retail buyers. And right now everyone's freaking out. And it just shows you that all these markets are the same, which is another reason why I'm super, super bullish crypto for the midterm and the long term, is that crypto is a better backbone for all of this finance. And at the very least, it's going to replace the back end of all of finance. And the question is just how big is that opportunity? Who's going to be the winners? And then do we get, once again, the speculative manias? I believe so. But the biggest thing that is important to do is to understand that these markets are not fundamentally different in the buyer, in the people buying the assets. They are fundamentally different today in the assets traded, but they won't be over time. So there's just a lot to be excited about, right? And that's why it's important. And we'll talk about the optimistic stuff after. But first, I want to get through the pessimism. That was pretty much the pessimism, by the way. If you ran it up once, you can run it back again. Shout out to my buddy K Money. And it's worth knowing. Oh, I didn't have that on screen. You ran it up once, you can run it up again. I don't know if I had this on screen, but I think I had this on screen. This was the financial TradFi part where I was saying everyone's turning on each other. This I found very interesting. All right. AI drives record $11.8 billion Black Friday online spending. We had the biggest Black Friday online spending of all time. Now, I couldn't find whether or not that actually corresponded to overall bigger. I think it was overall bigger, taking in retail, like brick and mortar as well as online. The biggest thing for me is that if you have people spending record amounts of money, then the economy is truly not in a recession. Like, that's not a sign of recession. Maybe people are being irresponsible, but until people really stop spending money, I don't think you get the sort of pieces you need for a true recession. So that's kind of where I'm at with it. Is right now something like this, right, is actually extremely encouraging, and it shows that where we are is we're just seeing a liquidity strain in markets, but that's the thing that's really pulling down the markets right now, and that all of the spare liquidity is going into the AI trade, and that AI trade is now being sort of somewhat assisted by the government. So we'll talk about all that, and we'll talk more about the AI trade in a different video. But essentially, we have a record $11.8 billion. And again, AI is apparently helping drive more consumer demand. So that's good for markets, good for the economy. Now for the optimistic side, smash the damn like button if you like the optimism, the traditional EllioTrades optimism. And you know, the thing about it is you guys know me by now, very long time. I truly believe that crypto has this ability for us all to do well and sort of buck the system and make our lives better, or else I wouldn't be experimenting in this space, not as long as I have. And it's been a rough year, but there's some interesting things to look at. Here's at least the glass is half full look at things. All right. Silver is almost $60, right? There's one of the biggest moves in silver that we've seen in modern history. Here, let me bring up the silver chart just so you can see it. It is absolutely crazy. Go for the corner overlay. Get this out of here. Look at that. That is a crazy. Let's go to the daily. That's a crazy chart. I mean, silver just looks insane. It looks insane. Silver since 2023 is just insane. Look at this. Up 3.5x. Obviously, the numbers aren't as crazy as crypto, but you know, look, this is a crazy chart. Absolutely crazy chart. I would love to see an all-time high retest. I mean, it would be great to see it come down and test back here. Maybe we'll get that. I would definitely be a buyer of silver on the retest. Looks like a great chart. Anyway, get back into this content here. Okay. Silver, almost $60. Gold, almost 4,300. Fed cutting race. Earnings growth, best in years. Midterm elections upcoming with all the signs of massive fiscal stimulus. This is the biggest part for me. And I put out a video on this, which is sort of an extension of my theory from Q1. If you remember in Q1, I started to freak out thinking maybe old Downey is trying to crash the markets because he knows the only way to get housing prices and prices of anything down is to induce recession and then come in with the medication, which is stimulus. And then you'd get lower prices, you'd get a deflationary shock, which will allow you to stimulate without causing like runaway inflation. So that was my initial thought in Q1 when it was pretty much down only. Then he did the first taco, the Trump always chickens out trade. The first taco was when he just pulls all the tariffs back, sort of gives this huge reprieve, and then markets rip. And he goes, you know, great time to buy. You remember that. And so my thing is this now happening now that we're on the eve of the Fed chair coming in? Now that Trump's realized that you know, he's got only a small amount of time before the elections, the midterm elections. Is he going to throw the spaghetti at the wall? Because it doesn't feel as though the spaghetti is being tossed yet. And we know this because the TGA, the Treasury General account, is just not really draining, right? It hasn't been spent a lot. Let me see. Let me see if I can bring up the live account. Yeah, here we go. So as you can see here is the TGA. And the TGA, as you can see here, is pretty much near $1 trillion. And if you look, here, let me get my better view on this. Let me scroll down. Okay, and if you look here, the TGA look at this. This is a record amount in the TGA, bigger than any period but COVID, right? So you have this massive amount of spending that the government can and will do, and it's just being kind of held here even after the government has reopened. So so to me, the opportunity here to see is Mr. Mel Madison right about this? I think that there's a ton of data stacking up that there's going to be a massive stimulus coming, and they might be trying to induce some deflation ahead of time, knowing that there's going to be this period before the new Fed chair takes over, which is another piece of content here, another piece of information here. Okay, so he's got a lot of other stuff here: largest tax refunds, the Genesis project guaranteeing government partnerships for AI. I think this is good equities, obviously bullish equities. The question is this government partnership good enough to keep prices elevated? We'll talk about that in another video. I think it's worth doing a video on the AI bubble just because in some ways it's very justified. In some ways it's very risky. It's very interesting, I think, as a topic, and highly relevant to crypto. It's highly relevant that you understand where some of the more aggressive risk capital is being taken to, especially in light of 2025 and how things have performed. It's worth understanding these concepts more granularly. Okay. This is foreign direct investment, 10 years, 4% no tax on tips. Yeah, all this stuff is smaller, right? I think that your big impactful stuff is you need to understand that we're going to have a massive stimulus coming into this next election, and timing your big push and your big risk on. Obviously, if you're so in risk like me that selling at 90% doesn't make sense, then you can just hold on and wait for better times. I obviously do want to do some housekeeping, which I'll talk a little bit about in a few minutes. I've talked on several videos recently about that housekeeping, but essentially it looks good coming into the end of next year. That's what's very trippy, is there's so many reasons to believe the mid to late 2026 period, or at least mid 2026, will be ripping hot. You'd think that they would try to time it though so that November 2026, when the midterm elections roll around, that would be the time that it would make the most sense to have the biggest fiscal stimulus to give the taxpayer some reason to vote red. Because right now, Trump came in promising that things would get better. Things haven't materially gotten better. In fact, the erratic policy has gotten a lot of people upset. I know this because I do a lot of canvassing of everyday people. I always ask people how things are going with their business. When I'm in Uber, when I'm going to the barbershop, when I'm constantly asking people on the streets, hey, how are things for you? How's your business? And not just entrepreneurs or tech entrepreneurs or people who maybe live in a different world, but just your everyday people. And a lot of people that I know were more optimistic about Trump are not feeling that way. And you see it in the polls, you see it around. So I think the administration knows they've got a lot of work to do to keep power in the midterms. And if they don't keep that power and it goes to the blue team, essentially it's going to be investigations, it's going to be a circus, nothing's going to get done. And they're going to try to jam up the gears to make sure that things look as bad as possible coming into 2028 for the Republicans. So I think it's pretty critical that 2026 become a better year than 2025. That's why there's so much at stake here. That's why I think the big play is going to be for 2026. Anyway, that's the bull case, right? You have just reiterations of this. You have a lot of different versions of saying this, but you have consumer spending up, strong technicals, the wealthiest generation in human history, and will continue to be. In the end, to me, the question is when bags go up, right? When are we going to see that? And so looking at that, I think we should go and take a look at what happened today. Because today, oh, by the way, here's Tom Lee predicting. Let's go ahead and listen to our old pal Tom Lee predict some stuff. Who wants a good Tom Lee prediction? Raise your hand. Let's go ahead and.
I do think Bitcoin can make an all-time high by the end of January. So
end of January. All right. So it was a double before the end of the year. Now it's all-time high by January. Goalposts have moved. It's okay. We're okay with that. But will he be proven right? I mean, the thing about Tom Lee, another thing about Tom Lee is if you were here since 2018, you will know that he has predicted like the market to rip every single week forever. So he's a perma bull. And that is the way to make the most money, because eventually you'll be proven right. And if you can just endure through those tricky periods like one we're in, then when the market rips, you will have accumulated. That's how you make the most money in markets. Now, of course, times like this, people like Tom Lee become the target of malice and anger and negativity. But again, like unless you believe that this whole thing is done, then he will be proven right eventually. But it's just worth noting that he has a long track record of being bullish through extended drawdowns.
I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Yeah, I mean, obviously, if we have a dovish Fed, it's a tailwind. Everybody knows that. I love a good Tom Lee all-time high prediction. I do think that he'll be proven right. Exactly when, that's the tricky part. I mean, there's a few things going on here. Let's get back into TradingView because this is like really, really important. First and foremost, here is some technical data for y'all. Smash like for technical data, okay? So what we have here in the yellow line is when QT officially ended, and then what you have here, and we'll bring this up, which is wait, where's my global liquidity index? Did we get rid of that? How do we get rid of that? That should not be gone. Okay, let me bring it back. I think it's this. I think it's this. And so what we'll do here is, first of all, we'll set it to cyan, and then we'll just take away everything but the Fed, so you can just see the Federal Reserve balance sheet. This is just easier, and then we'll bring it back to a different view. So this blue line shows you, and the reason why you can see this is the blue line when it bottoms, right? When it actually bottoms here, that's when you get, there we go. The blue line when it bottoms here, that's when you actually see liquidity bottom, right? The yellow line is when they officially ended QT in 2019. The blue line is when liquidity officially bottomed, right? So this is the time delay, which was about, if you get a date range out, this was about 5 bars, right? You have about 35 days, 35 days, right? So you had mid-July QT was announced to be completed, and orange line is when liquidity actually bottoms. Go ahead and move that here. And we're going to go ahead and just assume it's going to play out the same way. So we have QT ending today. Shout out. Like, if you're not having a QT ending party, if every girl in your town isn't turning up for QT ending, you need to find yourself some new girls. You need to find yourself a whole new stable of women. I'm sure you all have a stable of women. Okay. So the liquidity bottom should, if history repeats, happen here, okay? Which would be, where is my drawing tool here? It's the arrow. So what we don't know is sort of where things might go in the meantime, but we should see a bottom in liquidity within the next few days. That is not a long time. Again, I think that the hopes for a Santa rally have gotten dampened a bit, but it's important you realize that no matter how things feel right now, there's another way to look at them. And I want to bring up this chart. This chart right here is Bitcoin's reversals on the weekly, okay? This is Bitcoin's reversals on the weekly. What you'll notice is that every time Bitcoin has durably reversed major price action to the upside, right? To the upside. Let's go ahead and do this, right? Every time we've seen major upside here, what we have seen is what's called a weekly swing failure pattern on the downside, right? Where the price went down below the weekly support levels and then popped back up in what they call a swing failure pattern, or SFP. That's a technical term, but the point is, as you see here, we had this weekly low from December of 2023, and then we popped below it here in January, and then onwards and upwards. So we had this sort of below and then up kind of thing, where we tested the liquidity to the downside. We had below and then up, and we did it actually twice here, where we swept this weekly level. And this was back in July, the summer of 2024. Then we had it again, first on the highs in January of 2025, and then on the lows in April of 2025. And then we did it literally twice here, really. We did it twice here at the highs of 124, right? And then we got these fake pops up above 124. Okay, so the question is, can we durably reverse here without a test to the low? Like, is that required? I don't know. But just know, if it does do that, that would not be a different behavior. That would not be a different price behavior than we've seen. In fact, that would be exactly what we've seen every time before. And it would coincide perfectly with the mustachio trade, the mustachio indicator, which we all know is the most important indicator in the entire space, okay? When I have a mustache. Okay, so the other thing here is if we look at total is still kind of hugging this blue trend line that's been intact since, 2023. And for the most part, what I think people should understand is that every single time, even if you believe this time is the same, because right now you have sort of two camps. You have the people who believe liquidity and the business cycle are more important, that crypto is like a macro asset, it fits into the macro economy, and that the forces of the economy itself are going to drive Bitcoin and crypto to their eventual outcomes. Meaning if there's liquidity printing, if there's more money printing, that crypto should go up, Bitcoin should go up. There's tons of evidence of this. When there was the bank bailout in 2023, Bitcoin exploded, right? Because it was obviously the answer to this. And there was stealth money printing happening. There was money printing happening, okay? So the question is crypto and Bitcoin part of the larger economy, or does it just adhere to these 4-year cycles and it doesn't listen to anything else and it's just a cycle and that's it? And we just need to essentially understand that there's this pendulum clock that swings on a 4-year cycle and there is nothing else to be done. Well, of course, we can't go into the future, look backwards and analyze it. So we have to take the data that we have right now. But it's worth noting that there are ways to look at this cycle two very different ways. You have the liquidity angle and you have the overall cycle angle. No matter which way you look at it, that's bullish, at least short term, right? Because Bitcoin should, as it's done every other cycle, revisit at least the 200-day moving average or the 50-week moving average. So if we bust out the 200-day moving average, that gets us to where is this? 109K, right? Maybe you think that's a little bit too optimistic. So we'll go to the 50-week moving average, and maybe that's more in something you think is achievable. That's about 102K. Maybe that'll come down to 100K. But every single time there's been the collapse where people go, okay, it's over, and then everyone capitulates, and then there's the market rally that essentially sucks people back in. And the biggest thing that I would implore you to do, what I'm doing with my own stack, is waiting for that rally to do what I'm calling housekeeping, right? Now, on this rally, the tricky part is you're going to say, are we just about to run back up? Are we about to run it up and we're about to have our new all-time high? Or is this just yet another liquidity grab for us to then go and have our bear market? And then, of course, what is a bear market when we didn't have a parabolic blow off? Those are all the questions. But regardless of whether you're a liquidity cycle theorist, meaning that you think that these things, like the global liquidity index, right? That you think that those things are more important, and we should bring up the entire global liquidity index, actually. Let me actually get rid of this one. I'll bring up. Because if you're a global liquidity index person, if you're a macro economy person, and you believe that Bitcoin should adhere to the rules of the macro economy, then you'd probably factor somewhat in the trend. Let's go. You'd factor somewhat in the ISM, which is this gray line. This gray line, you can see as the business cycle extends upwards, you'll see that the peaks of Bitcoin correspond to the peaks on this, or very high periods on this gray line. In this case, in May of 2021, they were perfectly aligned, right? And as you can see, they've been, completely depressed, right? This is bear market territory. It was only this low in COVID, right? During the COVID collapse. Didn't even get this low. Or I guess it did get kind of this low, but this is extreme. These are extreme readings, right? Of, what was this, a 46? 46 is an extreme reading that was only really reached prior in COVID, right? So to be under 50 this long is just not typical behavior. So if you're a liquidity cycle theorist, you're looking at the ISM saying this should be building into 2026. This should be building as different governments stimulate. If you're a purist and a 4-year cyclist, you're going to say it's so over, bro. Just give it up. It's so over, and we just need to have a bear market, and then I'll buy the bear market lows and wait for the next halving, right? That's the two angles to look at this. But both of them would argue that there's, at least in the 4-year cycle theory, that there's this rally up to the 200-day or 50-week, and you have the chance to do what I'm calling housekeeping. Now, I defined this on my last live, but there was some actual technical issues, so we didn't keep it up. What that means is I would say get rid of the stuff you don't believe in. Be prepared to hold the stuff you're holding in case there is a bear market, meaning concentrate into your high conviction play, stuff that you think is going to at least come back next cycle, and also have some cash reserves. And that's what the point of this housekeeping area is. Now, realistically, as far as hard levels, it's speculation, but I believe that that housekeeping ideal zone would happen in the sort of upper mid 90s, right? If we just blast through here, again, we didn't get our housekeeping zone either. That would mean this time is once again different, right? It's different from last cycles if we just go down like this. So again, I think you can use the 4-year cycles, but I think you should just be honest about where they're being completely different. If we don't get a chance to sort of do housekeeping in the upper mid 90s, that would be a change of behavior, right? Key levels would be this sort of yearly open around 94. It would be this 102 level, and then it would be once again the sort of 109 level for the 200-day, 50-week, and yearly open. So one way to look at this would be to say, okay, I'm going to do 50% of my housekeeping here. I'm going to do 25% here and 25% here. The reason why you do 50% at the lower level is that you have a higher likelihood of hitting it. It's a probabilistic way of doing it. That's just one idea, right? The biggest thing is that if the pessimists are right and we are going to go down and have this Bitcoin bear market, and that bear market could land us, in my opinion, this 70, there's two major levels, right? Two major levels. Where is this? There we go. Horizontal line. First, we have this 74K level. That is a major level where it's worth taking a crack on buying stuff, because if it holds, it's very, very good for long-term structure. And if it doesn't, it gives us a huge clue as to where things are heading. So you want to buy that level with the understanding that you're evaluating if it's going to see, and if it doesn't, then it means things are potentially a little more cooked than we had thought here in crypto land. It also represents a 50% drawdown from, or roughly 50% drawdown, 40% something drawdown from the all-time high here, or this mid-cycle high, depending on how you view where we're at. And that, to me, in a cycle where we didn't get a parabolic blow off top, could be sufficient, right? So it's worth, to me, paying attention to this 74K level if we do lose these local lows. That, to me, is a major buy zone, which I will be participating in. Of course, the next major zone is down here at 50K. I think it might be too aggressive to expect 50K after we had such a muted cycle. That's just my particular opinion. But again, we're going to be data dependent here. The biggest thing is doing some housekeeping up in the mid 90s. If you are a 4-year cyclist, then that is something that will likely occur, right? That's the facts. It's happened every single time. If you're a liquidity cyclist, you're looking at it totally differently, which is, if you're looking at it from a liquidity cycle perspective, you're looking at global liquidity and you're saying, holy smokes, this line is literally altcoins versus Bitcoin, right? It's literally to the T. I'm going to get rid of the ISM because it's just too much chart clutter. But here we have, is this one? Yeah, okay. Here we have altcoins versus, or not altcoins versus Bitcoin. This is the actual central bank liquidity, right? This is just central bank liquidity getting rid of M2. And you can see that it is uncannily similar to the altcoins versus Bitcoin. So you can see, you can almost match them up, right? And very interestingly, sometimes crypto is ahead here, sometimes it's behind, but overall they are the same chart, right? Where altcoins like completely exploded with central bank liquidity and completely evaporated without it. So it's worth noting, like, these are release valves for central bank liquidity. Once again, proving that crypto is more macro asset than it's not. Even altcoins are macro assets, just a part of the market that's less dependable and less predictable than Bitcoin itself. Just worth noting that these are still parts of the liquidity ecosystem. I hate this yellow color. I just really don't like it. Let me make you blue. So what we know for a fact is that this blue line will stop going down, right? We know that the blue line will stop going down today, and that the actual effects of that will kick in by next month. So what we can sort of estimate here, and we can use this as a very rough guide, is say it goes down a little bit more, and then we get some stagnation before it starts working its way back up a bit. What we know is that every major nation wants to stimulate. So this blue line for sure is going to go upwards, or at least stop going down. And so that means altcoins versus Bitcoin should, in theory, see the end of their bloodletting, right? Which has been 4 years of bloodletting here, right? And so that's what's exciting if you're a liquidity cycle theorist. Again, I think it's fair to put some eggs in each basket. Say, hey, look, the 4-year cycle's played out for sure, but there's a lot of evidence that this liquidity stuff is a bigger impact on our bags. So it's just worth balancing those. Okay. Now for more Hopium big boy tweets. We have Psychedelic here. He's effectively showing how there's just a lot of pieces of the cycle. And I'll go to a corner overlay here that are not the same as prior. In fact, he shows that this is much more similar to the 2019 MACD cross. You have a monthly MACD cross, which has occurred at all the prior tops, but it also occurred here in October of 2019. And he's sort of showing how, based on the copper gold ratio, the PMI index, the MACD, and Bitcoin, he's saying, hey, look, this is much more similar to 2019. Again, this is kind of the crux of the liquidity cycle bro argument. That's me, Mr. Liquidity Cycle Bro. This is the bull case, which is that, hey, this looks bad, but really it feels more like 2019 on steroids than it was a actual true crypto cycle, because we didn't have this spiraling optimism. We didn't have new tech powering like a new wave of innovation. We had like a meme coin cycle. We had a gamble cycle. We had a perp cycle, all of which, by the way, if you weren't here in 2018 and 2019, that's all that they were doing in 2018 and 19, not the meme coins, but they were doing gambling, literal gambling, crypto casinos, and they were doing perps. Those were the only game in town. So in a lot of senses, you can look at the meme coins as gambling, in my opinion. You look at, yes, people said, oh, these are our new altcoins. I see them differently personally, but at the same time, then you look at the perps dexes, and I see them also as just sort of all weather, you know, trading / gambling. And you see that there was a lot of similarities, right? To the people who in 2018 and 19, the only things that were really relevant, the only ways to make money were longing or shorting Bitcoin. And then the other ways to make money were actual on casinos or investing in tokenized casinos, that stuff. So to me, there's a lot of similarities to 2019. Does that mean we instantly get a bull run? No, but that could give us clues as to how the next period of the economy will be expansionary, expansive, whatever. Comment if you know the right adjective to use there. And that will be net bullish, and that we might not be stuck at the beginning of a new crypto winter that we'll need to see thaw to get into spring, to get into summer. It might not be 4 years until our altcoins pump. It might be closer to 4 to 6 months before we get a major pivot and expansionary period. That's the question we're wrestling with. That's why there's so much nuance and so much noise and so much confusion. Is it 2019 or is it 2021? That's the big question. This is more on the MACD here. Psychedelic has just been one of the last bull posters standing. Shout out to Psychedelic for doing such things. But in the end, it brings us to a very big question, which is, what does the future look like? Like, what does the future look like? What are we doing here? After we do our housekeeping, after we get our house in order, we're holding things that we believe in. We have some cash on the sides in case we get a deflationary shock, in case there is this period of dryness that allows for Trump and co to come in and stimulate like crazy and grow the economy, make people feel good coming into the elections. Well, I don't think spending all your bullets today gets you a good feeling general consumer in November of 2026. I think spending heavily in maybe Q2 gets you happiness in 2026, because these things have a bit of a lag, but they're not a year lag. They're a few months, right? So what does the future look like, and what types of assets are interesting? I wanted to bring this up. First of all, this is an awesome graphic created by a buddy of mine named Capital Flows. You guys have seen him. I've had a podcast with him on X. I've also had a lot of references to his content. Here is his content. It is Capital Flows. Check him out. And he's essentially saying that there is a storm coming. The problem, like, I like this thesis a lot. The problem is it's not super duper actionable, because he's saying, you know, the conventional wisdom is that a weak dollar is bullish for stocks, essentially expanding the balance sheet, and, you know, generally accommodative policy is good for risk assets. What he's saying is that the reality is that if the dollar is selling off because of a currency crisis, meaning that foreign governments are no longer trying to invest in our economy and that they don't have as much confidence in the dollar, that it's not a normal dollar sell-off, but it's a sort of macro issue, that effectively that this can cause more forced selling of US native assets like stocks, right? And so this is what he's saying. And he's saying, you know, roughly that you're going to want some version of cash and gold, right? That's kind of what he's saying. I've talked with him a lot personally. He doesn't make this point on the infographic itself, but he's saying you need some cash and gold. I'm going to be stockpiling Bitcoin. And I'm also quite interested in, on this dip, getting heavily into both Ethereum and privacy, right? So let me, first of all, give you a little bit of a taste on the Ethereum thesis here. Hayes does a good job here. I'm going to play it for you. And I think it's very important that you're tracking this.
Move from 7 to 300 was driven by meme coins. the meme coin activity was on Solana. Obviously, meme coins have sort of died in terms of activity relative to what it was in sort of like 2023 and 2024. Solana needs a new trick. I don't know what that new trick is, but again, it's the number 2 largest L1. I think they'll find something. Will it be enough to power price performance greater than Ethereum? I don't think so, but I think pretty much every other L1 besides Ethereum or Solana is a zero. It took all these organizations like,
So, I mean, obviously the core thesis here is that the meme coin casino is what drove Solana into its position of excellence. Now, I think that it is naive to think that that's the only trick it can pull off genuinely. I think Solana has proven that it's the fastest, best single monolithic chain, and that is very valuable. But the question is, what does the future of the industry look like? And is it monolithic trading on a single chain, or is it enterprise-driven businesses like banks, not small businesses, right? Like Stripe, like PayPal, like is it the financial sector given their own chain to do operations, and then do they need a public blockchain to plug into? And the answer to all those things is Ethereum. So while Solana is absolutely the best open single chain, does Ethereum have the superior design to attract the biggest flows in the future from the biggest entities that are adopting the blockchain? And fundamentally, what is blockchain? Like, are we doing everything open, transparent? Is this about giving the degens the best investment opportunities? Or are we transitioning into an era where it's not really about us anymore? It's about these big financial players and enabling their businesses. And the answer is probably both, but it's worth noting that right now, the PMF, the product market fit, is much more with Ethereum and its layer 2 ecosystem for these financial players than it is with Solana. Just something to note. That's the point Arthur's making here. And that essentially Solana needs a, quote, new trick. Like, why do I need such a fast blockchain? Like, what does it really benefit?
Large banks a very long time to understand that all these bullshit projects that were sold to them by a bunch of ex-TradFi people trying to do crypto, like R3 and Corda and these sorts of things, is nonsense. You can't have a private blockchain. You must have a public blockchain for security and to actually have real usage. I think the message has finally started to get through, especially with the stablecoin narrative. And so you're going to see large banks start doing crypto and Web3 using a public blockchain. I think the public blockchain will be Ethereum.
Yeah, so I mean, he's just rehashing that. I think it's worth noting here. I really like this little quote here. Tim actually used to develop for the Superverse protocol, really just brilliant. One of the most technically brilliant, like academic smart contracts developers I've ever met. And he says Ethereum could have just as easily embraced the meme coin trend as it applies the fate of the L1 protocol. What does this mean, right? Ethereum was busy shipping blobs for rollups. Obviously, I'm not going to define all that. If you know what that is, good for you. Obviously, if you're familiar with Ethereum's design. And Shat coins. I'm going to try not to swear. I mean, look, crypto's already struggling with engagement. I'm trying not to swear. Try to get this family-friendly content out there. You know what I'm saying? Shat coins are absolutely an application-level phenomenon, right? And Pump could have chosen to make their gamble slop happen anywhere. Financial nihilism is bad, by the way. I agree. I think that it's unfortunately financial nihilism. Just to comment on this last part, I think financial nihilism is just kind of forced upon us, right? It's been forced upon us by the world that we're in. People are just less likely to pursue a cohesive long-term investing strategy when the future is so uncertain and it's so hard to break out. You need such a big win to break out. Anyway, that's a different observation. But I agree. I think Ethereum is looking long-term, 15-year trend, 20-year trend, and Solana is really aggressive at chasing the short-term trends, which is how to captivate attention and sort of volumes and ethos today, and they both have a place. But what you're seeing right now is the reverse of going heavily in, not all in, but heavily in on meme coins. Is now Solana's identity is in flux, and identity is a big deal. Ethereum's branding itself as this neutral world computer that's long-term, and Solana focused on being this trading ecosystem, and mostly what it's trading is what it was trading was meme coins. However, they have tried to pivot into stocks and other stuff. Again, the question is the biggest venue going to be a single monolithic chain, or are we going to see a lot of existing customers on things like JP Morgan and BlackRock and those types of organizations start trading on like permission, like L2s on Ethereum? That's an interesting way to look at it. Also, a lot of people are looking at gold. Mel Madison back again. Shout out to Melly Mel in the house saying, hey, this looks more like a failed breakout attempt. I don't know. We'll see. I'm no good at predicting gold, right? I'm no good at predicting gold. So again, gold is something that seems logical to want to own. It does also feel like gold's chart is totally cooked, along with silver as well. Not totally cooked, but it does feel as though the trade has been somewhat missed, and it would be nice to see a reversion before loading up. But regardless, the question about how to plan for this next phase is real. The chart for gold is not a bad one. This is an insanely strong one, insanely strong. And it's screaming that it wants to go higher. Question is exactly when. So what does the future look like? Again, the point of this section is to define what does the future look like. So again, I want to understand that if this storm hits that capital flows is predicting, I'm going to use it. I want to use it to accumulate Bitcoin. I want to use it to accumulate Ethereum. I want to use it to accumulate gold. And I want to use it to accumulate privacy coins. Now, Monero is not being talked about very much in this Zcash sort of mega trend, right? Zcash has been the mega trend. But Monero is very much the other sort of key privacy protocol in the crypto world. And so I really, really want to focus on Monero and Zcash as part of my portfolio that I want to accumulate, because I do think that when you zoom out, if you were to gamify this, and this is one of my biggest theses right now, and sorry, one second. One of my biggest theses right now is that the actual demand for Zcash has nothing to do with the actual internal workings of crypto. This is a macro development that for the first time, and this is the early warning signs, that people are seeing the Trump popularity and this sort of old golden age of crypto mentality potentially at risk, given the weakness of the economy, the polls, the predicted outcomes of the elections. And people are already saying, well, what if we get a Zoran Mandami? What if we get someone in 2028? What does that look like? And so you have whales getting ahead of this saying, well, I want private money. I want money that is totally off the grid and is totally private. And Bitcoin's not that. And so that's like another way to look at the Zcash trade. And that's another way to look at what might have been happening over the last few weeks. Again, I do not know how to price a store of value for privacy, but I can see it becoming highly exciting and highly, very much so in demand if we progress to a world where some of the optimistic regulation around crypto becomes more pessimistic, more invasive, more controlling. There is very likely a day where the government demands to know all of your accounts, and there is very likely a day where private money becomes very popular, right? That's the way I see this gaming out. Maybe that's another lens for you to see some of the stuff going on in crypto as very macro, very much so an observation on reality beyond crypto. And so that's where I think there's maybe a political thing that's happening around Zcash more than anything. People are trying to buy this stuff while it's still being permitted. But most of all, we need to understand, and I saw some super chats come in, I will come and answer those. But most of all, we need to know that there is just so much pessimism, so much short-term thinking when we have the Clarity Act is on the absolute 1 yard line. We will see this industry mature and evolve in incredible ways. And what must be really hard for people is to understand that there will be, probably looking back at this moment, 15 years of unadulterated growth for crypto over the coming years. But that you have to maybe change your mentality into being long-term versus expecting a short-term dopamine high. Very hard for me, as I was expecting some extreme dopamine highs this cycle. But shifting to a longer-term lens means understanding that this is how the maturity of the asset class actually takes place. This is what maturing and growing up looks like, is you grow 100x over 20 years, over 15 years, like Apple, Google, Tesla, etc. Right? Like that's how those growth arcs happen. If you look at the bottom in 2002 versus where they're at now, they went insanely up. But that didn't happen in 1 year. It didn't happen in 2 years. It happened over 2 decades. So that's the difference. Is maybe the real 100x is understanding and being able to predict what the world looks like in a few years and being willing to hold and being willing to shift your mindset. So that's something that's been on my mind a lot, because there's no world in which crypto isn't having this asymmetric, huge growth in front of us. But understanding how to max benefit from it and how to stay away from the things that have actually caused this journey over the last year or two to be so negative, that's what I'm trying to figure out, and that's what I'm trying to put my finger on. And so we're going to work through that together. I'm going to hop into some private chats or some super chats here. When playable games on black hole decks, Yeah, I mean, we'll check it out. Obviously, the goal of the DEX is to focus on, one of the things that people need to understand is the goal of a V33 DEX is to focus on bringing deep liquidity to the most important pairs, not necessarily all pairs. And so if there's a token with native demand, then it's a token that is beneficial for the token holders to bring liquidity to, because there's fees that will be generated. So that's the game, right? Is that you want tokens that have some semblance of demand. If a token has a threshold of demand, then it makes sense for it to join the black hole DEX. So shout out to Invest Geek for that comment. It's worth noting as well that regardless of whether these V33 DEX models, I think, are going to prove themselves to be some of the most important in the industry, and that black hole is really just getting started. There is a lot. You'll be hearing a major update very, very, very soon before the end of the year, as it's planned, and it will share with you exactly how big the vision is for black hole, and it will not pause and it will not wait for better market conditions or for things to become obvious. This is going to be a heads down, build your ass off during the tough times type of project, regardless. And I hope you all are very excited about what happens. The amount of success that black hole has had on a chain like AVAX, to me, it's very historic. It's very historic. And I have actually put up some data here. If you can see here, this is the revenue to market cap across top DeFi protocols. As you can see, black hole is far and away superior as far as the amount of revenue to its market cap that it has generated, based on DeFi Llama's sourcing. It's just crazy. It's just crazy. So the amount of time it took for black hole to reach tens of millions of dollars in revenue paid out to stakers is so much faster than any other protocol that it's being compared to. So in the end, the excitement that I have is tremendous, and the goal will be to put your head down and to crush it and to build regardless of weather, because the weather is not something that I can predict, you can predict, or that is really relevant, because these are true on-chain businesses that are decentralized. In many ways, it fulfills the hopes and dreams for crypto that we've had since the beginning, and I believe that it's important to push this as hard as it can be pushed. Now, of course, you know that there is a super buyback flywheel with the black hole project. As prices are depressed, those buybacks will actually take up more and more supply per dollar generated. So it's important to realize that there's not, the downtimes can potentially be more impactful in a positive way if you're long-term thinking. And I am, as you guys know, super right here, lighting up my room every single episode, not going anywhere. Huge part of everything I focus on, and I've never sold any of my founders tokens, and it's been almost 6 years now. So yeah, which maybe I'll go down as a absolute intergalactic Dumas, but I don't think so. I'm very dedicated to making this one of the best protocols in history. Okay. All right, I do have to wrap up here shortly. Not seeing. Is this just a recording masked as a live stream? Has he interacted with chat once? No, I have not interacted with the chat. Big Sky 69. I don't do that. Yeah, I mean, look, there's going to be. I see a lot of people who are. What's really funny is the community actually gets super positive when things get like down bad. And I remember the bear markets, like where you get the best interactions with community. And in the end, look, the market cycle has certainly not gone the way we want it yet. But the game is afoot, right? We're seeing huge pivots in liquidity. We're seeing huge pivots at the macro level. And there is very clear evidence now as to what has been affecting the bags. I believe that the future is going to reward heavily the people who are building intense, successful on-chain protocols now today, and that the market structure and regulation coming, which is still not live yet, and the changes to global liquidity are going to prove that out. In the end, all that matters is W's and L's, and we keep working. I hope you guys have enjoyed this episode. If you did, please like it, share it, subscribe. I'm going to be doing some more scripted stuff soon. As always, I hope you're doing well as you can be in these markets. Just remember, there's always a next play, always a next piece of the game, and we are going to be hunting the best alpha for you. So I'll see you very soon on the next episode, and thank you so much for tuning in. Cheers.